Good afternoon, everybody. This is Dan Hussey with ElliotWaveForcast.com, bringing you our live trading room recap. Taking a look at the S&P, dollar yen, all the yen crosses, gold, Aussie, all of our majors today. It's April 24, 2014, 1 p.m. Eastern, and let's begin with the S&P 500. So far today, the low in the tick and the high in the tick correlated not with highs and lows in price, which means we have both bullish and bearish divergence open, which often means we need to step down and take a look at our at what the market has traded. Inside today, we pulled back in. There we go. We pulled back this morning off of an 1882 half high in the futures, traded immediately down at the open into the gap fill at the 1869, and traded an extension reverse engineered from the 1851s to highs. Most importantly, the reason we're even reverse engineering that extension is because we broke a full 50% short off the high, which means that we have a valid ambush long, and which means there must have been some kind of inflection this morning that occurred even though we didn't have it on our charts. Full 50% long aligns with today's daily pivots. The 1870 halves is where our 50% line comes in. That's right between the Globex and the daily pivot. Remember, our gap fill support is still down at the 1869, which traded this morning. Certainly went through it, but quickly whiplashed back and have broken full shorts off of prior highs. So we're bullish the S&P, looking towards 1890 still in the short term. That's the very short term trend. It's still up, guys. Stepping out to an hourly chart, however, let's give it a moment to load here. There we go. We are looking for full halfway back long at 1843s. All-time highs to 1800 lows prior. We broke the full halfway back short and have a valid ambush long. Remember, from a 4-hour perspective, we pulled into halfway back for the year, drawn from lows of the year at a 1731 to highs of the year at an 1892. 2014 has basically pulled back in 3 waves. Almost equal legs if memory serves. Oh no, equal legs perfectly into this 50% pullbback. The initial reactions off these levels were inflections into their first targets, the 38.2 at an 1831 and the 76.4 at the 1819. So really technical 3 waves back into a full halfway back long for the year. We've gotten a bounce. We broke the full short and now have valid ambush long. If the market pulls back into an 1843, it would be a gift. Okay. Otherwise, 15 minutes, we're still holding 1870 support, which is valid while above 1860s. Okay, so pretty bullish S&P, good looking market, and definitely don't want to be a seller. This is a time where you just aren't on that side of the market. Personally, for trend purposes, this is trading very well. The dollar yen. The best and easiest solution for the dollar yen is to trade down to a 99.60. That would be equal legs down from the 105.45 highs, down in 1, 2, 3. Equal legs would put us down into that 99.60. Equal legs up here, we had 1, 2, 3. I'm presenting all of our scenarios. One thing is for certain, from the looking for the equal legs down into 99.60s would be an absolute gift, and you'd want to be a buyer down there if and when it happens. Full 50% short off this prior high has held. That is at the 102.70s, and then also off the 101.30 lows, a full halfway back long has held. Going down to an hourly chart, you can even go as far as saying in all of our yen crosses we have some kind of equal legs down that is held to the tick this morning as well, and you can see the initial reaction get you free into the 102.22. So very much both sides of this market are getting reactions, and it can go either way. The easiest solution from the 4-hour chart is down to a 99.50, 99.60. Doesn't really mean you need to be a seller. But there are inflection zones that are getting participation on both sides of the market, so there's zero reason you couldn't participate on either side, get free, and then let the market go. make the decision for you. Because once you're free, it doesn't matter. And if you have the ability to hedge, you could be trading both sides of the market, particularly in the dollar yen. It's probably going to be a gauge for the speed and veracity of the rest of the yen crosses, and if and when those rally, if the dollar yen goes, those other ones are going to be just through the roof because they are by far better buys. Euro yen, very similar structure, equal legs down. Again, traded a front run of 4 pips this morning from a 141. Which would have been equal legs down overnight, pulled into a full 50% long off of prior lows, just like some other yen crosses in the euro, and still has a 50% swing short holding, and that's kind of the knife fight that's going on. That's the resistance zone we're finding ourselves at, and then this 50% long has clearly created a reaction. Keep in mind the euro yen going out to a 4-hour chart is inside of a much larger 50% long. Drawn from the 136.20 highs or lows to high here. 3 waves back, certainly in the initial pullback. This looks like inside price action, so there could be a larger time frame range developing here at the very least. But this is also could very well be the start of a bull run, because we've traded 50 backs. To top it all off, the big daily extension came out of 136.70, traded, got free, broke a full short against that, and the market has pulled into a 50% long. So very bullish setup kind of building here. We'll see where it takes us over the next, I'd say week. Aussie yen, much the same regard, an original extension anchor to highs here that traded prior. Kind of got this whole move going through that 94.70 high. Same anchor new high has traded. We'll see about inflection here. The inflection's begun, but it's only bounced about 10 to 15 pips. It is also equal legs down to the tick. So again, the inflection zone, first targets come between a 95 and a 95.10. And the entries were a 94.70 to a 94.60. Again, prior highs here breaking. They were resistance, 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 broke, being tested as support, and 3 waves back now. Cannot ignore on a larger time frame that the Aussie yen has 2 major levels going on. It has an 89 inflection for long, and the shorts have a 96 level that has traded, hasn't gotten its full reaction yet. The longs in the smaller time frame are still holding and propping this market up into it, but equal legs back now, or equal legs up rather, would put us into a 97.40. Could very well trade up and into those levels. That's the area. 97.40 to 98 area is where the targets are for the current longs from this 94.70 area. A path of least resistance may be up in the short term before a much larger decline. And that this inflection zone that is between 96 to 98 can result in a move all the way down to 85s. So a major move down almost to 82s rather. So big time frame. We could still be going up before a larger decline. And, of course, there is, because this 88.70 area is a much, much larger daily inflection, those targets are all the way up at 113. So lots going on here. Both sides getting reactions. No reason you can't play both sides and be a smart, nimble trader that gets free and is prepared for anything. Just get free. Gold, go to the pound yen in a moment. Just quickly on gold, full halfway back has held, full short has held. Inside the short, a full short is holding, and we'll see what happens. This 12.85 area is a pretty big support level now. Pretty important that if gold is heading higher, it needs to turn and do so from here. Okay. Not much else to say. Covered it earlier. Really want to talk about the pound yen. It's one of our more favored crosses at this time. Great sideways price action that looks like momentum is finally about to blow with it. So a gift would be to be able to buy somewhere down around 171 now on a pullback. Absolute gift, because your risk is less than 100 pips for upside towards 179. So you're talking about 8-to-1 risk reward to risk ratio. You're risking 100 pips for over 800 to gain. in this triangle burst pattern that's occurring. Inside of it, it's been incredibly bullish. It's very reminiscent too of a dollar-yen triangle from back in November, about the same time frame. It was a little quicker, but full shorts are broken. The difference here between this triangle and the other dollar-yen one is that it's actually held longs inside of this, and those longs are continuing to press the market against this resistance level, and ultimately now any pullback here, three waves would put us down to a 170.80 equal legs, that is, and the 50 back is at a 171.16. So anywhere in that area, look to be a buyer for that push through highs. I mean, I think a great setup here. Momentum is completely drying up. You're seeing this divergent, or this convergence of momentum, right? The range is getting compressed and compressed, and when you do that, it's a lot like, lighting a fuse on a powder keg. Big explosions usually follow this type of compression, downside or the upside. Just get free. Take a risk with, take a risk on the trade that has a high probability and a good risk reward ratio. Get free and let the market decide for you. Euro Aussie from a 4-hour perspective. 3 legs down, equal legs here, getting a bounce from the 147s. Still have 4-hour extension shorts holding. Traded once before to target same anchor new low. It's 149 to 149.30 area is both where equal legs up as well as the extension short, 50% short, come into play. So we'll see. They already got a reaction to their first targets. That reaction was from the first time the 149.25s traded down to a 148.50. So this is the second test of this level. Need to turn over to turn lower. And the reason we're saying there is a chance of this still going one more leg lower is because there is a 145 much larger inflection zone for the daily longs. But we do have equal legs down, and this is all you technically need to reverse. So 147 inflection zones in play, trade got free, and it has upside targets of a 160. Okay. Aussie US dollar, very similar to the euro yen, just invert it, as well as the Aussie yen. 3 waves back, have traded this morning into an extension long inflection. We'll see if it holds. Otherwise, we're looking for a 90-60 support level, and even then, there's a very good chance that this is still 3 waves. Or really, it's 1, 2, 3, 4, 5, 6, 7 swings. Could be an A wave before a much larger B. We'll see. But the inflection zone that is in play here is this 92.60 area, excuse me, and it has traded, and we'll see if it gets a bounce throughout today and into this evening. Euro US dollar, much more like the euro yen, full 50% longs traded. It was equal legs down here, and now rallied, broke shorts, pulled into a 50% long here at the 137.60s, and it's basically been flagging between that and a 138.50, which is a broken 50% short, but it is the resistance level. So a little bit of a range here. Expect it. Still expecting 141 targets out of it. It's just taking its time. So still looking higher. Longs have already traded support levels, and we'll see if they continue to hold. If and when this market does decide to turn over, equal legs down will take us down into a 136.15, and there is a larger inflection zone for a buy at a 136.30. So if we do turn low, if we start breaking below 137.50, we'll talk about the 136.30, 136.15. That's definitely the next area to buy. But for right now, euros in longs, that could take it to 141. Last but not least today, the pound. British pound is very bullish, just like it's the pound yen. It's got almost the identical setups. It's in a much larger extension long, which also happened to be a traditional swing here, 50%. That, of course, was down here into the invalidation point of a 50 equal legs. That's sometimes that happens, but we can see it was clearly the support zone that was holding. After that, we pulled into a 50% long. That long went to targets. Next in the series, drawn from entry lows to target highs, has traded and has upside targets of the 168.80s. Inside this level, we've pulled back into a 50% long, as well as equal legs down, traded yesterday. We talked about this. Traded into at 76.4%, so provided a free trade right here. Here's that the initial inflection. Stops below 167, excuse me, 57 have remained untouched, although risk on this type of long, you'd want it, about a 167.25, just in case it does go to fill the 167.50s, but upside towards the 168.80s here in the near term, as long as support continues to hold. So that's it for me today. Some very big setups occurring, lots of big levels traded overnight, lots of equal legs providing bounces, and need to be aware that these inflection zones, when they're in play, they're your method of reducing your risk as a trader and successfully entering into high risk high reward, low risk setups. So have a great day, everybody, and we'll be back with you tomorrow and as price action develops.